Hello guys, welcome to the Trading Parrot into another episode of the Weekend Alpha. In this video is the one that you probably want to watch if you want to be absolutely ready for a trading week starting on Monday. We're going to look at all the time frames, try to wrap up everything that we know from the week. If you have missed any information over the week, we are going to cover all of that and a lot more. It's not only going to be about Bitcoin. By the end of the video, we're also going to cover Friday close on general markets, and we'll do some speculation of what could be coming in as we enter on Monday. Guys, if you like this type of content, make sure that you are subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. This video is coming in on a Sunday, so hopefully we can get over 1,000 likes. If you give me the vote of trust, you probably are hitting the like by now. That's definitely gonna give a big slap in the face to the YouTube algorithm to show this video, despite the fact that we only have 16 points in Google Trends. That means that we are at the very lows of attention in more than 2 years, while at the same time hanging right below the all-time highs. And I will say the news of the week is the shocking 14-year-old BTC that is starting to bring some rumors whether it's Satoshi or someone else. For many, this might be a fun topic to discuss, but personally, whether it's Satoshi or is to do with some quantum computing attacks to all wallets that do not have the same tolerance to those top types of attacks compared to the newer wallets, it's very scary, guys. I think it's low likely to be something to get worried, but if it was, we are talking about something that can shake the ground big. The key points are Bitcoin price loses 2%, which is nothing on the day that the 14-year-old coins are moving. They say that there are some links between those wallets and Satoshi Nakamoto ones. There's tons of shorts above 110. Price slid underneath 108 just for a few moments. And we are not talking about a small amount, guys. This is 80,000 Bitcoin. And we've seen all over Twitter multiple posts showing into which wallets it's going, how much it is. Just so you know, 80,000 Bitcoin is almost $9 billion. One of these transactions were turning $62,000 into $4 billion. That's a whopping 64,000x, which is just mind-blowing. Probably the best investment in history, not just from the point of view of how much it gains, but also by doing nothing really. Literally buying, investing, putting it in a pen drive for 14 years and then coming back to collect $4 billion. That's crazy. Now, I'm pretty sure this is just my finger in the air that if there was any distribution coming from that, it hasn't really happened. And we're going to look into Big Well Explorer. We're going to look into the SOPR indicator to see from the actual data whether this has already impacted the markets or not at all yet. And you can see how those big accounts in YouTube with over 1 million subscribers were calling for the breakout in this area, and now they go fully quiet and just rinse and repeat. And by the way, guys, I'm doing a little bit of an old habit in here. I'm going back into researching a little bit with Freak Trade, AI, and all of these types of technologies for building proper trading bots. If you were interested in this, if you are a pro, if you are into Python coding and all of this developer techs, make sure that you join my Telegram channel. And the last message I place is this one. Just reply with a comment there. I'm looking for actually people to collaborate on these topics, not on the PineScript side, not on the retail side of TA, but actually on optimization, genetic optimization, and advanced kind of quant trading bot, just for exchanging ideas, trying different setups, and having a little bit of a side fun. Just reply to that message and let me know what you're up to. And if we can do something, I can invite you to my Discord server and we can collaborate. There's this article saying Bitcoin consolidation continues, 2 key support levels to watch. And I'm interested to know what other people are seeing. Indeed, they refer to 98.5k and 106.5 as the support. If we look into this data, it's showing these 2 areas where there's been big accumulation, big buys on spot, and they should be acting as support. When I look for areas of support, what I do is I put the volume profile, I zoom out on the weekly time frame, and I I look for these hills. For example, in here we have 104.7, which was support all this area in here, and it was resistance before. So flipping that into this resistance is a big deal. That's why I was shouting so loud when we lost it, the 104.4, and I shouted even louder when we reclaim it, because that is bullish. The second level of support, if we were to lose that 104.4, is for the confluence of both the volume profile peaking at 96.5 and the bull market support band waiting for us right there. So if we lose that 104.4, second strong level of support is 96.5. Now, if things get a lot more dramatic and scary, there is a support that stands out between 84 and 87. This area in here, I will call it the flip into bear market, because if we go beyond that, you can see that there is a huge depression in terms of structure in here and a straight move into 63. At that point, we are talking about of a drawdown of 43%, and many people will say, well, that is bear market already. Looking back in time, in the bull market in here, we have a fall of 55, okay? And yet this new bull market where we are, it looks a lot more driven by institutions. Trade 5, if you want, is a lot more controlled so far, and people kind of discard the possibility that within a bull market we can do a 55% correction and survive it without going into a bear market. I think going into 60 something K will be a huge test in this cycle to not enter in a bear market. So those are the three levels that I pick as the strongest levels of support, structural levels that we need to pay attention. If you were not watching my videos this week and you're still here, I kind of forgive you. That's fine. No hard feelings. Here you can see that we broke down this channel to the upside, and we are talking about the Federal Reserve balance sheet. Breaking down this channel below hints with the possibility of a new channel now going down. A channel down in here managed to keep the price 9 months going sideways without any fun. It was extremely boring. So if this doesn't get reclaimed quickly and it doesn't break out from the top back into this area, we could be seeing something like that incoming, at least just from the perspective of the balance sheet, which has a huge effect in the price, not just of Bitcoin, but also in the Nasdaq. Things to be positive, well, the global liquidity continues to go up, and you know my feelings. You know perfectly well that when we were topping at 69 in the past cycle, the liquidity went up straight into March of the year after. So that is 5 more years of liquidity global going up, and we still went into a bear market. So all these people that say up only thanks to this, they're taking a big risk. Of course, it could play out, but just in the same way, 50-50% it could not play out, because cycles end with the liquidity global going up. So remind that yourself and don't swallow the pill fully just for the sake of getting some hopium, a feel-good sensation, and then not wanting to look at anything else. The reason I say this is because most of those posts are saying all you care is that liquidity global is going up. Those people deserve a slap in the face, more like a punch in the low stomach, I will say, because they are gonna get people wrecked if it doesn't play out. Aggregated open interest broke out. That is bullish, but towards an area of a revenge rally that can get easily rejected, as I said before, either by this line at 35 billion or at 36.3 worst case scenario. There is the chance that we break out and we do a major move up in the open interest, which can bring 140k for Bitcoin, but with this current shape of the open interest, technical says that that is the lowest scenario given this shape. Things can change, of course, but I can only tell you what I see in front of my eyes right now. And we are in July on a 4th month in the green, despite all the expectations of the summer being bearish. Notice that in this cycle we have broken tons of rules when it comes to monthly returns. We have a September with a 7% that broke all expectations of being in red. If you focus on 2021, look at how green the months were in January, February, and March, and we kind of did more or less the opposite. Then in 2021 we had 3 months in the red. In here we ended up having 3 months in the green. So it feels like this cycle is a little bit upside down when it comes to monthly returns. If we were to continue that trend, then this July, which is supposed to be in the green in 2021, now it should end in the red red, but who knows? Monthly returns are all over the place, so I'm not gonna use them to actually decide my trades. I'm just gonna look at them and say, do whatever you want. You're kind of acting contrarian this cycle. And in terms of CME, this CME gap that we've already formed is from Thursday to Friday, which I have flagged as number 1, located at 110.1 at CME premium. On Binance, that is 109.5, and it's something that has me now thinking, since I'm in a short around that price and I have a CME gap which is bullish, could attract the price to the upside. Of course, it won't fill the gap over the weekend if we go there. Notice that we closed this Friday as we approach the weekend at 107.500. So if now that the price I think is around 107.9, so that means that we are already creating a gap to the downside. So if we continue going higher, we're going to have a CME gap located in here, and then we have a bullish one on the top end. So it's going to be a very interesting scenario on Monday, assuming that on Sunday we close something like this. If on Monday we take this one and then we come back to close the one below, it's always a bit trickier when you have CME gaps on both extremes. Of course, price might end up on Sunday closing to the low end, particularly if those Satoshi coins do some sort of distribution, being 80,000 Bitcoin. Even if they just sell 10,000, they are going to affect the price in some way, particularly with the low volume that we see on weekends. So let's say if it goes this low, then we're going to have two CME gaps, one block in here and then one very thin at the top at 109.5. I'm not going to change the Bitcoin status. Everything remains intact relative to what I have already said. I got a new pattern on the 4 hour that I want to discuss with you. It's an ascending wedge, which of course is a bearish pattern and is currently breaking down. So let's talk about that first. Then we're going to talk about CPR, daily time frame breakdown. We'll cover the weekly, of course. I'll show you on the SOPR this extreme amount of distribution that just happened on derivatives, actually on spot. And later in the video, we're also going to cover this new chart that I discovered. I found it incredibly useful to navigate these markets. Yeah, you are in the Sunday Alpha, so make sure that you have a look at the description. There are timestamps for every single topic, including when we go and we do the analysis of the order book, liquidation pools, general markets, and all of that. All right, so this is the breakout that retail saw. We notice at last minute that if we connect this line with all these dots, it perfectly matches up until there. We speculate that we were going to top around 110.4, and we precisely pinched that level and we came back for support. That happened on Saturday at 2 a.m. Since then, we just been going sideways, but very sneakily the price here, because it's producing a breakdown from this pattern, the ascending wedge. Of course, in the next few hours, this could get bought up and go back into the top of the range and hit that liquidity that we know we have around this end in here in red. So far, that is not the case. I am starting to see a little bit of support at 107 and 106 coming in thanks to some additional bidding that we're going to look at the end of the video. But so far, the price is just following the trend line. It doesn't really want to decide whether this is a retest successful for continuation or if it's going to break down and lose the previous range and make this breakout a complete failure. Of course, if we go into the order block of 105, we can already say that this was a failed breakout. Now, I want to look into the RSI because I have updated the levels of support and resistance. Of course, we have the 83 that we keep tracking. That corresponds with the last two touches in a descending wave from the top of the range. Then we have the 71.87, 66, and a new support coming in at 40. Why I put this line? Because I wanted something to correspond with the support that we have from the ascending wedge. And why do I need that? Why do I need to look into the price and into the momentum at the same time? Because I want to see the order. Price breaking down first before the RSI breaks down this support at 47 could indicate that this breakdown is not to trust. So let's match these levels of RSI with the price and let's see what price needs to really do to break down both price support and momentum support. So the support currently from the equivalent ascending trend line on the RSI is currently located at 107,290. So if we don't go below 107,290, then we could say that it's not a good quality breakdown yet, even if it's breaking down already on the price trend line, and it could still reclaim in here and go into 111 with a decent chance. Now let's look into resistance, because in order to get into 111,595, which is the top of the range, once again repeating that resistance in here, and I see that there is a confluence with the yellow line. That yellow line is a little bit higher than the orange one. The orange corresponds with 66. Let's actually change the colors. Why do we need to make things so complicated? So this is gonna be yellow with yellow, and then the green one in here, let's make it green, and then the top one corresponds with the orange. As you can see now, we have the three colors matching there, and then we can see them in the price. At the top in here, we can see 109.9 corresponds with going and rallying once again against this that we already pierced on the 2nd of July, 66 RSI, 109, 110 more or less. Then the green, which is the 71.87, is currently corresponding with a new rally into the top of the ascending wedge, and then we have here coming in 115.6. That is if we manage to get to the top of the range like we did a couple of times, once in November and once in April around the 22nd. In terms of CPR, we are in between the pivots and the first resistance of 112. We still don't achieve the target of this breakout, but I'm tempted to look at this also in this way, right? So we have this as support, we broke it, and we are kind of creeping up trying to reclaim it. So there's always two ways of looking at things. Eventually we need to marry one of them, and of course I am in a short, so in a way I'm engaged with the yellow resistance more than with this breakout. Now notice, if we do the breakout, my plan is still to add a little bit more around here. At least so far that is my idea. Now let's go into the daily, and let's appreciate that on Sunday we are potentially putting a breakdown of the first line of support of this bullish breakout. We had the breakout, we talk about the rolling over in here, we have a new high, higher low, all perfect. This is still a higher low, but it's kind of rolling over and started to break the first line of support. As we do that, the volume profile is saying that we are still holding the top of the range. Look at the battle going on in here above the blue line. 1, 2, 3 times that we are holding that. We can hold this and then still carry on into the 85, potentially also breaking out from this double bottom that we have in here. The neckline is in dotted orange and the target is around 121k. Now if we lose again this top of the range, we talk again about going into the point of control at 96.3 or levels of support at 101.8 on the daily time frame. That corresponds with the 38 that we have holding the price in there. Then the go to hell level of the 25 at the bottom of the range puts us at 91k as of today. After all, that is supposed to match somewhere around the bottom of the range of the volume profile too. This whole breakout on the daily, on the weekly, on the monthly is with declining volume. Just something to consider, which is not positive but not final, because the bulls are always gonna say that that volume is meant to spike once we actually do the first big damage around here. Something that can also be said once we broke out from this megaphone pattern, we started hitting that liquidity, and it is around that timing where we start seeing the volume spiking. Maybe not on the daily, but definitely on the weekly. On the monthly, still healthy. We can see July is still in the green, but there is an evident slowdown in this move up. We're definitely not expanding in the move. For example, this breakout right here started slow, got bought up from the support, and started producing candles each time larger. So this one was larger than this is larger than that. At that point, the volume pierces the average, the RSI breaks out, and it goes way higher than before. Eventually we slow down, we find a new range. But in here the story seems to be different. Notice is how we get bought up from support, which is great, but then the second candle slows down as soon as it breaks out and does a bit of distribution in here. That distribution is still our resistance, and each candle is getting more humble and more shy about that current resistance of 112. We all know that 112 is not just causing this to the price, but it's also causing this to the volume. And let's talk about the elephant in the room, which is the 80,000K Bitcoin that moved after 14 years and the effect that that is having on the SOPR. The SOPR made a massive historic punch. It went to 118. Remember, in the past few days, we were talking about freaking out because we are at 103. Now we are at 118. What the hell is that? We can zoom out and we're not going to find a 118 in a long time, probably never ever. This is 2017 and 18. All of these levels get to 107, 118. That's 11 more than the highest I can find with my eyes. And the previous time that we have 113, which is at the top of 73, we range all this time. So there has been a move of coins, and that is captured by the SOPR, and it prints a sell signal right there. Now, if we look into the Big Whale Explorer, we're gonna find that there is nothing yet going into exchanges. At least if we decide to trust into the block, or if it has updated in the last few hours, we don't know, but according to these metrics, we don't see any huge inflow so far. So maybe it moved from one wallet into another wallet, which is already scary, but not necessarily into any of the wallets that are tracked as belonging to an exchange. And that's why we don't see a huge spike. I was expecting this morning to see a distribution spike like this because they deposited into an exchange. Imagine that exchange suddenly receiving 80,000 Bitcoin. Many exchanges don't even have that amount by now, and suddenly they need to sell it into the market. It will be crazy. And as I say, my biggest worry is not even if this belongs to Satoshi, which is already a nightmare. If he was still around and he controlled all those coins and suddenly he decided to cash out, that will be a disaster. But my biggest worry is actually these quant computing computers that are apparently now getting into the era, into the stage that they can still attack old wallets, not the new ones, but the older ones that are apparently already vulnerable and can get controlled and eventually moved into another wallet for distribution. If we enter in that era and that is confirmed that can be done, that makes liquid an enormous amount of Bitcoin that currently is tagged as lost and impossible to liquidate. So I'm just crossing fingers that this is a one-off and it's got an explanation that is gonna hit the market eventually, because otherwise that's gonna be probably one of the biggest challenges that Bitcoin will ever face. A sustainable way to sell lost coins is just a disaster. And we can see in here that we remain in the capitulation area of hash ribbons. That means that the hash rate is still a little bit too low. It needs a spike into over 1 billion, probably to close the mouth and print a buy. Let's look into the spot and futures volume ratio. This is a very interesting way of seeing the market. In yellow, you can see the spot dominant areas. Those are areas where most of the volume comes from people buying spot. Then you have the futures heavy, which is in blue, mostly speculators. During these periods, it means that people are neither moving much their coins, the spot coins. There is not much demand for spot during these periods. And it's almost a great alpha, right? We could say that in areas that are primarily dominated by spot are great areas to buy and even to add to your position on the way up with more certainty that you are in the right direction. When it's dominated by futures heavy, you probably just want to speculate, do swing trading, longs, shorts, and eventually wait for another spot dominant area to start accumulating again. In the area where we are, you can see that is a mix between futures heavy or balanced. When we had these lows at 105 recently, that was kind of balanced, but we are far away from February, which was the last time that we were spot dominant. I have added this into my CryptoQuant account in my dashboard, and I'm gonna continue to monitor it frequently. If we enter in an area of spot dominant, I will let you know. Make sure that you're subscribed to the channel, to my Telegram, Instagram, or Twitter, whichever we want, for time-sensitive alerts. Long-term holders are taking a dip in in here, and possibly that is to do with the distribution, not distribution, with the moves of those coins. Obviously, those are long-term holders. Those are the longest term holders that there are, and now it's taking a small dip in here. I will have expected a bigger move, but who knows? The supply is now flagged as almost 16 million. Well, maybe that's why it's not yet showing up in there. We are in grid at 66, and we continue to have this short-term liquidity right above the price, which I still admit 100% that even though that is in the area I'm in a drawdown with my short, it is very likely that we take that even if we are gonna go lower. I do not discard that because of being in a short. Some people think, oh, he's taking a short, that means that he doesn't think we're gonna go there. No, absolutely not. I don't have any certainty that we won't go beyond 115. This is how it looks, the order book as we speak. We have some support in here at 108, and 106 is the lightest support that we have. The resistance has become lighter. Let's go into BookMap and let's have a look at where is that support. You can see it live in here. At 106 we have 666 of support. The CBD is in negative. That means that there is currently a ratio that puts more aggressive sellers than buyers. And in terms of resistance, that is at 109.5, where we precisely have that CME gap that formed between Thursday and Friday. I have BookMap showing me all the liquidity aggregated from Binance Futures, Bybit, BitGet, and OKX. And since 4th of July, there is a sale currently going on BookMap. You can get up to 50% of BookMap Global Plus and data. This includes data for crypto and data for general markets, indexes, forex, and everything. In order to be able to claim this offer, you can use the QR code currently appearing in the screen, or you can go to the description. There is a link for BookMap right there. There is still 5 days and 11 hours to claim this exclusive offer. In terms of liquidity pools, let's start just with CoinGlass. We still have this liquidity at 111, and I can see that it's becoming lighter as we go lower with the price. That's probably a result of the shorts entering right there at the top around 110, 109. Below the price, that 81 becomes heavier with time and is getting some lines in here at 86, probably low leverage people that are entering with longs too. Remember all that area in there, we just noticed that is heavy in futures. They're trading all that area just like this area in here. When it comes to the liquidation map on CoinGlass in the past 30 days, that 111 remains the boss around the close proximity of the price, but the 103 is becoming heavier and heavier, and we could say that the pan is oiled in this area. Very easy to cook some eggs and go and hit 103 too. We are around 2k below this level, and we have it at 103, 4k going lower, so we need probably double the energy to go into 103 compared to going into 111. There has not been many big liquidations since around the 22nd of June. And that is already a big period of time without substantial liquidations. I can tell that probably the market maker must be planning something cool to happen this week. So be on the watch out for aggressive moves this week. We do not have to wait that long to get big liquidations. You can see that at least once a week there is $1 billion in liquidations or around that range. These liquidations in here are very small, around the hundreds of millions. We can see in the order book that the brown whales continue to dominate the CBD. Those are 1 million to 10 million sizes of positions, and the purple whales, I will say, remain in this belief. Those are the ones that need to be involved in buying in the CBD. That means the line that is purple needs to be pointing up. 99% of the time when price starts going up in a substantial way, sustainable, I will say, the purple whales are involved and not only the brown ones. This is something that we can see in material indicators. What we are currently seeing is called fire charts. And I was mentioning earlier in the video that we have a little bit more of support. You can see that support now sitting at 107.5 and at 106 with 800 and 700. On the top end, we no longer see that dominance of ask liquidity sitting above the price. Even in the lines, you can see them a little bit lighter on the low end, and the depth ratio is turning into green. green. So we'll have to look at that on High Block Capital that this morning was having some issues loading. Please don't break High Block Capital. I really need you today. At least we have this chart, the other one incoming. There you go. It's working now. We have an increase in longs coming in at around 39 from the lows of 29. So that is something. They're holding the price and we can see that the bid has increased. We are no longer in an area with a huge wall of selling sitting right next to the price. If we focus on the percentiles applied to different percentage of deviation of the price, 10, 1, 2, and 5, we can see that it's becoming lighter. It's not the most support that we have ever seen. That happened on the 22nd of June when the price was at the lows. But there seems to be good support over this weekend. The delta is not very big at the moment in terms of liquidation, so there is no alpha coming from the end. I have introduced a new metric in here that I implemented myself, showing the 5 to 10 CBD, the 1 to 5, and the 0 to 1. The 0 to 1 is in red, the 1 to 5 is in yellow, and the 5 to 10 is in green. And you can see that the three of them are going up. That means that the support, the limit orders that we currently have below the price is increasing. And that confirms my thesis that we have better support than what we have in all that area in there. And for that, I'm using the professional subscription on High Block Capital, which does cost a lot of money, and only hedge funds and big smart money is having access to this. And now you also have it by being subscribed to my channel. If you want to get it at a big discount, there is also a link in the description if you want to have a play with these toys that are fantastic. Let's look at the fair value gaps. We have two fair value gaps above the price. This one in particular, the 109,500, is the one that is got me a little bit itchy with my short position because we could go there to hit it despite what direction we go after that. We do have one here at 106. The 103 overlaps with the liquidity pools of the last 30 days, which is the one I would love to hit with my short, but I will have to wait for what happens with market open on Monday, most likely. General markets close in the green, at least for the S&P. You can see in here we have new all-time highs last week, the Nasdaq as well. If you haven't been able to watch any of my videos this week, I will say you should not miss this one that is called Stocks Disturbing Rally right here 2 days ago. Even if you don't trade general markets, that has massive implications for crypto, end of bull market, both for stocks and for crypto. If you want to trade crypto and get 30,000 in bonuses, you can use my new exchange, 2bit. It was built by ex-Bybit people and it really looks very easy to use. It's a non-KYC exchange. That means that in just 2 minutes you register and you can start trading. You can use up to 200 leverage. Do not use that for God's sake. There are over 1,000 trading pairs and you can trade from anywhere in the world except for China. If you are new to 2bit and it's your first account, use my link in the description. As soon as you register, you get $50 for free. That is even before you deposit anything, so it's a win-win. Just wrapping up, we had a breakdown on the 4-hour, but I don't necessarily trust it so much because the RSI might find support around 40 and we still might head up into the upside. That 40 is around 107, so we really need to break 107 to see a breakdown that we can fully trust. So far we only have kind of a local breakdown. If we connect these two dots, we get that breakdown and could find support at 40 and still head back up to the top of the range. In the top of the range, we could continue inside this ascending wedge, which is bearish. And even you can see if we go into 111 or at the tops of 113 and take a lot of this short-term liquidity, that is still within the context so far of being in a bearish 4-hour pattern. The 1 hour is also below this line and I remain bearish if we continue just to hit it from the low end, and that is despite of going up. If we start taking this resistance and we touch it and we conquer it at 112, we could enter banana zone and that could span into 124k. There has been a huge distribution going on and we need to remain vigilant the rest of the week, particularly if we start seeing other wallets doing kind of the same modus operandi, in which case I'm gonna start having bad dreams probably by then. Hopefully not wetting the bed. Let me know what you think about these recent events and if you think that I'm exaggerating, which could be the case, by the way. Thanks so much for watching and I'll see you next week with the market open tomorrow. Bye bye. Take care.